Hi everyone, I'm Ken, the inventor of the CTKS method that shows where smart money is buying and selling. Each day I seek to give you an edge in the market using professional smart money rules and thinking based on my more than 30 years experience in financial markets, to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth and positive excellence in the process. If you want to get the institutional edge, please subscribe. You'll find we have one of the best communities on YouTube. Please note, I don't have WhatsApp or Telegram. Let's run the numbers. Bitcoin is currently down 0.25% to 22,208. Ethereum is down 0.13% to 1554. In this special episode, we're going to be talking about real rates versus gold. You can see already the inverse relationship. We'll also be talking about the smart money buy levels on Tesla. We'll look quickly into the economic health of the markets. Then we'll explore what could be happening next for Bitcoin and, of course, crypto. But first, some very good news. Beardy's CTKS Partial Masterclass Scholarship was awarded to TF Congratulations, my friend, and thank you, Beardy, for your kind generosity. The CryptoTradingKS Masterclass is a premium Rolls-Royce level masterclass on crypto technical analysis using the CTKS method. That's a method of TA, or technical analysis, invented specifically for crypto that accounts for exponential implosions and explosions in price and updates normal stock market and Forex technical analysis. Well done, TF. A couple of days ago, I asked the community, would you like to know more about real rates, especially inverse real rates and their impact on gold? And people reached out and said, yes, inverse rate me. Okay, here we go. Real rates are just inflation-adjusted interest rates. If inflation is high, real rates will fall. And vice versa. The rate of change of interest rates is also quite important. If nominal rates are going up faster than inflation, that will also push real rates up. One thing that I always say, you don't have to build the car to drive the car. You just need consistently reliable signals. And you can see here, real rates and gold are inversely related. Why don't I just inverse real rates and we'll see what happens. When you look at inverse real rates against gold, you can now see the association. It's much, much clearer. One thing that we saw recently, inverted real rates were decreasing and gold was starting to get into a breakout channel. And what actually happened? The inverse real rates confirmed the breakout in gold. And we can see when gold turned over, inverse real rates were also coming down. It looks like inverse real rates are starting to cross over again. This could be very, very good for gold investors and traders. We do very deep dives on this and many, many more topics inside the masterclass. When it comes to trading and investing, always think about the knowledge plus the mindset. If you were trading a coin at this particular time, you would say this looks quite good. We've got a bit of support, upward support, and we've overcome levels of resistance. Let's just play this forward just a little bit and see what would happen. You can see we had quite a sell-off as Bitcoin came down. Now, what does that actually mean? Would you actually buy here or would you sell here? That's a very, very important question. And this is a coin in crypto, but you could do the same thing if gold came down, or if Tesla came down, or Facebook, or an indice. What would you actually do when price goes red? Would you say to yourself, I'm getting out of here because it's just going to go down and down and down and down? Please let me know in the comments. I wanted to share this coin trade with you. As price came down, I BORSOG'd in. I actually bought at this 388 level. This was basically a bit of a flash crash in Bitcoin. And what happened next? Where did coin go to after that? Of course, a big red spike down would be enough, would be sufficient to clear most people out of the market. And let's just go forward and see what actually occurred as time progressed. We can see Sia Coin just trying to consolidate this area, but looking a little bit weak, starting to get above resistance and then going for it. One thing that we know, sharp angles do tend to reverse or reflect. That's another rule inside the masterclass. Now, what kind of return would we actually be looking at here for something like that? That really depends on how you think the markets are going. And you can see markets are always moving in a wave. For example, you may have said, well, Sia Coin looks pretty good now, everything is good, and people would actually buy up here, then get locked in as price comes down. And then they realize, oh no, I got it wrong, I need to sell out. And then what would happen? Let's just get this all on one page. Okay. Before I show you the sell level, I just wanted to quote out Wabi Sabi from yesterday's video. Wabi Sabi said, I made a healthy 10% on perp the other day. It could have been 20%, but I set my sell orders at the percentage I was happy with for the trade. Like you say, we don't have crystal balls. 10% is a win. Yesterday, we also talked about fearlessness. Michael said, if your position size is too large, you can get very freaked out. So being fearless with a trade and sticking to your trading plan means having a trading position size that you can handle. Thank you, Michael. Crypto Turtle picked up on the 10-5-10, and the 10-5-10 funds are very important to deploy around times like this. I reached out and told the community about 2 days ago about 10-5-10. If you go to buymeacoffee.com/CryptoTradingKS, click the post button and then scroll all the way down to Rule 18. Patiently apply the 10-5-10 rule. I made this open to the public because I think it's really important that people understand how to deploy 10-5-10 funds. And this was before the sell-off. When I place my buy order for Sia Coin at this 388 level, this particular level here, I actually set my sell level simultaneously when it filled. And what I set it for was 415. I felt 415 was a fairly good return if it got there. Don't forget, the markets were really quite negative. Do I feel bad, like Wabi Sabi said, that we missed out on the top? No, not at all. And this is a key to understand. Instead of comparing price to where it could have gone, actually compare your return to what you could get reasonably. Professionals understand percentages very, very well. And if you look at the top US savings rates, 4.55% annual percentage yield, or APY, is the best that you can get. And that's pretty good as far as banks go. But what actually did we turn from Sia Coin? And don't forget, APY, or annual percentage yield or return, is all about holding something for 12 months. It's locked in. You can't take it out. It's there for 12 months. I always provide my trade history. You can see exactly what happened. What was the invested amount? It was 499.9962. That's right here. What was the returned amount at 415? It was 534.789.75, just here. That's a return of nearly 7%. Now that was done very quickly, in approximately 23 hours, so just a little under a day. And you can see the annualized return is actually quite high. The annualized return on a bank is 4.55%. So let's just make it 5. Let's be generous to the bank. So it's a 5 in here with no leading numbers, just a 5%. So if you do anything better than 5% or anything better than 10% on this annualized return on investment, you're doing really well. That's how you want to think. I'd like to introduce you to Rule 690, levels not money. When a lot of people enter the markets, they think of money on the lines. Just think of levels. Take the money away from the equation. This sounds really counterintuitive, but if you're going to be fearless, you must think in terms of levels and not in terms of money. There are all sorts of levels that you could put in. You could put in risky levels. You could put in highly conservative levels. You could put in something in between. But just bear in mind, they're all levels. What this actually means is this is a buy level, buy on red. This is a sell level, sell on green, BORSOG. And what we're actually doing here is just setting a level. I set what I predicted was a reasonable level, just below all of this confluence. Hang on, let me get rid of that. That's a bit better. Just below all of this confluence of resistance. We do get sharp angles reflecting, but they can take some time to reflect as well, and it really depends on market conditions. Another rule is don't be greedy. What you'll find, if you're actually greedy, if you're focused on the money, what typically happens is you end up losing. Many people were interested in the smart money levels on Tesla, and I said if enough people are interested in, yes, I will definitely cover it. And people reached out and said, Ken, I want to know. So you got it, my friends. What we can see with Tesla between 190.51 and approximately 192.25, there is a smart money buy level in Tesla. We saw recently that Tesla sold off traumatically and was caught by this smart money buy area. Without these areas, you have really no idea as to where price is going. For example, you could think about it like this. As Tesla was doing its thing, we could see upward support, and then it just dropped like a brick. A lot of people would have been very, very freaked out and added to the sell pressure. But what we see is, as we know where the smart money buy and sell levels are, we have a very, very different view on the market. Let's do exactly the same thing again and see how we could react. We know that there's a smart money buy level around the 191 mark. And what did price do? It actually pierced through the 191 mark, but then it recovered. And we can see that price is always trying to ping pong in between smart money buy levels and smart money sell levels. This is a very, very powerful thing to know. So the real question is, where is the next Tesla smart money buy and sell level? The next smart money buy level on Tesla is from 171 to 172.60. So if we get a violation of this 191 smart money buy level, if it turns to resistance, a fall down to around the 172 mark could be on the cards. Don't forget, price is always moving in a wave. But what we've seen here, we've got a lot of fresh air down here, and we've had a tremendous amount of consolidation in Tesla between this smart money buy level and this smart money sell level. So if we don't get above the 207 level, Tesla could see negative price momentum. But to answer that question, we can't just look at Tesla. We have to stack probabilities. How do we do that? Glad you asked. I'll show you. But before I show you, if you want anything marked up with the CTKS method, you can actually look in the description of this video. You'll find a form where you can actually fill out whatever it is that you would like me to mark up for you. I'm always here for the community. I'm very, very happy to help out, but you need to let me know, and I need to have it in a bit of a standard so I can refer back to it. It's better that you put it in the form rather than in comments. Comments can get lost very quickly. One thing that we've seen in the S&P 500, we've seen a fairly significant bounce off this support that we kind of anticipated anyway. If you look at the CTKS method on the S&P 500, you'll see that there was a lot of support below that bounce. It's not at all surprising that the main markets actually did what they did. Professional investing and trading is all about systems. You must have a systematic way of looking at the market. We do. We know our foundations. Then we look into the stock market, collecting probabilities, stacking them. We come back into the crypto market, understanding the market's focus and understanding opportunities reset daily, just like they do inside the stock market. But getting your mindset correct before you buy and sell is absolutely and utterly critical, or else you'll be afraid to enter when you could make the best possible returns, and you'll be afraid to exit when the markets are topping out. Another important system for you to deploy is your CTKS code. This is your daily three-dimensional risk management code. You look at what the market did in the past 24 hours. The crypto market did come down. Then you would estimate what is the percent probability of the market going down. This is for tomorrow. What's the percent probability that it goes neutral or just consolidates, goes flat? And what is the percentage that it goes up? And you put that number in there, that letter and that number, so you can see what the market did currently and what you estimate the market will do tomorrow. Doing this code each and every day is vitally important. Then you need to think about your portfolio. What do you think that you will do if the market goes in that direction? How do you think your portfolio will manage? What percentage of your portfolio would go down, stay neutral, or go up? And if the market is going down and you have inverters in your portfolio, they'll go up. The last part is the synchronicity factor, how synchronized in with the market you feel. The market is always allocating funds from the desynchronized to the synchronized. You want to get synchronized, and you can get synchronized by understanding that you control the trade or investment, but it's the market that controls the returns. And those returns are always based on your active learning, your knowledge, and your courage. The market always penalizes blame and gambling. We know that no alt can escape Bitcoin's gravity, so it's very important to look at Bitcoin. And what have we seen recently? We've seen recently that we've had our second golden cross. The first golden cross, we saw that the market went up, followed by a fairly significant retracement. Let's just get that on the cards here. That the market came down. There was so much euphoria inside the market. Bitcoin and crypto has done a golden cross. It's all up from here. Just go all in and more. And a lot of people did that. And then the retracement came. And then when people said, oh no, I've got it absolutely wrong, the market absolutely rallied. So people got in again. And what did the market do? It came down. But we had a secondary golden cross just recently. And that was around the time I was talking about please deploy your 10-5-10 funds. One thing that we can see very, very clearly here, Bitcoin is rejecting this smart money now sell level. It was a buy level. It caught that negative momentum. And that's why you can feel fairly confident to get in when things are diving down, because they should reflect and at least touch, if not overcome, the smart money buy level above. But if it becomes resistance, you've got to think that the price could be going down to meet the next smart money buy level, which is from 20,500 to 20,800. Bitcoin is currently 22,242. As always, have your three-dimensional thinking. You know that the market can go up, it can consolidate, or it can go down. You can have a specific probability. You might think there's an 80% probability of it going down, just a 10% of it coming up, breaching this smart money sell level and coming up and touching resistance. And you may think there's a 10% probability of going flat. That's all fine. Keep your eye on price action. Something to bear in mind, when I looked at Sia Coin, I bought when the price came down. This is of course Bitcoin, not Sia Coin. And where did I set my sell level? Underneath this resistance. Did Bitcoin come back and ping this resistance? No, it did not. That means that Sia Coin is very strong, but the case is always that all of the cryptos follow Bitcoin's gravity. If we look at Sia Coin now, it's following Bitcoin's gravity because that's exactly what the alts do. I'll show you exactly what I mean. You can see Bitcoin overlaid on Sia Coin. What you can see is Bitcoin did not recover to the level that we were anticipating with Sia Coin. So the Sia Coin trade was actually quite good. Even though it overshot, that's no drama. That was a good profit taking. The critical thing to understand, Bitcoin's gravity plays absolutely out on the crypto market. When we look at Ethereum, this blue line, Bitcoin's gravity, look at what happened to ETH as Bitcoin came down. It came down too. The same with BNB, the same with XRP. the same with ADA, but they all responded differently after that negative price momentum. And the best winner here was absolutely XRP in terms of its pattern recognition. Look at that strength. That is quite a recovery. You want to pay a lot of attention to how cryptos recover or don't recover after these sell down events. As it's Sunday today in Australia, where I'm recording this from, I would love to hear ideas about what kind of content you would like in the channel. Please let me know. What kind of things would you like to see more of, and what kind of things would you like to see less of? I'm here for you each and every day. Kate and I get up and we do this video 7 days a week, 365 days a year, and we've been doing it for years. Our focus is helping you, so if you could help us to help you, I would really appreciate it, and Kate would too. A lot of hardcore traders don't care at all about mindset. That's a very, very big mistake. If you're focused on money and money is your goal, of course it's a goal for all people, but the concept is focusing on money and not on levels will actually work against you. And if you're being successful focusing on money, if you swap to focusing on levels, you'll see your profitability probably literally triple. There were some fantastic shares on fearlessness in the comments on yesterday's video. Congratulations again, TF Theta. And TF Theta said, trades done without fear but with knowledge, that's the key, as well as scaling in and scaling out. Shane said that fearlessness is following your system without worrying about the money. Art said that there is always opportunity if we look hard enough. BORSOG trading demonstrates fearlessness because you're actually buying on red, just like I showed you with Sia Coin, and I showed you a different token yesterday as well. Art said, on the reddest of days, we're finding the best deals while the rest of retail investors are running for cover. On the greenest days, we are thankfully taking our profits, getting dry powder ready for another battle. Michael's comment about managing your position size is very important if you feel uncomfortable with the amount of money. If it's causing you sleepless nights to put so much money on a trade, just scale it down. And Art says, I think our community is mostly fearless because we're still here in the game after such a terrible year in 2022. In responding to Art, TSP said that CTKS methodology shows it's irrelevant if it's a bull market or a bear market. Ken gives us faith to know that you can make money all the time if you have the right knowledge. And the beautiful thing about our community, we buy long at spot. We don't use derivatives at all. That means we can never get liquidated because crypto is so incredibly volatile. Rajat said, I agree probabilistic fearlessness when based on knowledge and clarity is worth its weight in gold. Thank you, my friend. Dinesh said, fearlessness comes from courage and self-confidence. To have self-confidence, we need knowledge. To have courage, we need a process and we need to focus on the right things. Fearlessness must therefore be a result of what you know and your ability to process the various scenarios rapidly in your mind and take action in an instant, which means you have the right knowledge like the CTKS system embedded in your mind. Thank you, Dinesh. And Seb S. said that we as humans still own ancient hardware, our brains, which is fear-driven. Positive excellence overcomes the fear-driven and destructive decision-making process and installs courageous and peaceful decision-making. Installing this update is very challenging because you're literally rewiring ancient thinking, ancient hardware. It's not easy to do, but it's totally worth it. Thank you very much, Seb. Tales from the Man Cave had a very, very good comment. He talked about actually going through different trades and increasing and not being subjected to fear. Well done, my friend. A very powerful statement. Stop limits are basically an expression of fear, and had I used them, it would not have worked. Brett raised the point. It's all about going slow to go fast and to get into sync with the market. The next level is scaling. I'd like to thank everybody who kindly bought Kate and I a coffee on buymeacoffee.com/CryptoTradingKS. And from Vicente, thank you Ken and Kate for your daily and tireless effort. The amount of knowledge you provide us with on a daily basis is brutal and basic to be in sync with the market. Greetings to the whole community. Thank you so much, Vicente. Beardy said it so well. In the CTKS family, we run into the burning red candle building with fearlessness because we have our three-way strategy in advance. And thank you again, my friend, for your kind generosity. A big thank you to Purpuratum, and TSP had a really good statement. With crypto going down, now is the best time for investors to actually scale in, but don't go all in and more at one level as you've seen. And the truth is that this will be a trader's market for the next foreseeable period of time. TSP said, interesting, I was at a family wedding today and all I heard was crypto going down, down, down. Now is not the time to buy. People just don't understand. Surely for investors, now is a good time to add to some bags. Absolutely true, my friend. Getting on the right side of the percentage is really important. But the key is to understand this is retail thinking, not professional thinking. A lot of people will say, don't buy the falling knife. Where did that statement come from? Where did don't buy the falling knife come from? And why shouldn't we buy it? Because the smart money is buying it. They don't want to get an overcrowded trade. And another thing, have you ever noticed that buy is a green and sell is a red? Subconsciously, I believe this is actually enforcing the idea that people should buy when the price is going up. After all, it's green. And sell if the price comes down. This is retail thinking 101. This is not the way we think as a community. We think exactly the opposite way. And we have Rule 621, buy on red, sell on green, BORSOG. TSP said, traders make money, but only if they follow the rules of the CTKS methodology. That's my personal view on this market, if you wish to be a successful trader. Thank you, my friend. We have such an amazing global family. I just want to let you know how much Kate and I appreciate all of you. Have a great day or night ahead, my friends, and we look forward to catching up with you tomorrow. Take care and bye.